Welcome back, everyone. I'm extremely excited for our next presenter. I'll tell you a little story about this person. I worked with him extensively at GameStop before he went over to ATW. And we had been working to convince GameStop to go from their on-prem world to the cloud world. And this person was very, very open to the idea. And I can't remember if he bought a copy of my Planning Cloud book or we gave him one. But we checked in on him a few weeks later and said, hey, are you open to going to the cloud yet? And he said, well, we went to the cloud. And I said, what do you mean? He said, with your book, I was able to do it entirely myself. This is the first time I've ever pondered my life choices, and are writing these books a service to the community? Are they costing me significant revenue? But I have to say it takes a very special individual to be able to do an entire PBCS implementation by himself with only the copy of a book. We've since gone on to help him with some other applications, and he's moved on to great things over at ATW, heading up ePBCS and FCCS. And with no further ado, a longtime friend of mine, I'm extremely happy he's here, Trey Daniel.
Hi, everybody. Thank you, Edward, for that great introduction. And also thank you to NRL for hosting this, as well as to all the speakers speaking and all the attendees attending. So yes, I think I have like 5 year books, actually, Edward. So you're definitely making revenue from at least me. I don't know about everybody else.
Okay, so wait, let me do some math. Let's see, I make $1.50 on each book times 5, $7.50. Yeah, no, that does make me feel good. I thank you very much, Trey. I'm happy that you're here, that they have done some service to you, but you have gone so far beyond them.
Well, I promise not to write any competitive books, so that's your thing. So I'm not the author. But thank you for the introduction, and thank you everybody for attending. I have the lunchtime slot, so hopefully everybody's got a sandwich or soup or salad or whatever. Maybe next time, Edward, we can get the NRL Amex, give everybody some Uber Eats. I don't know. We can talk about that later. But I want to welcome you to my presentation, Retail Consolidations, Budget and Planning and Reporting. I'm Trey Daniel. I'm currently working at American Trailer World, ATW. And I'll go ahead and get started with the presentation. So just a quick bio for me. I've been in the Hyperion world for about 15, 16 years now, doing all sorts of things from, you can see some of the companies I've worked for. We're doing Hyperion Consulting with PwC and Accenture. Shout out to Karen Nugent. I think I see you on the attendee list from Accenture alumni. After 10 years of the consulting, between those two companies, ended up at GameStop, moved to ATW last year, and then I'll actually be starting a new job with Toyota on Monday, so super excited about that. I'm getting the full COVID experience of interviewing via Zoom, remote onboarding, all that kind of fun stuff, so we'll see how that goes. My LinkedIn address is down there. You can see that if you want to shoot me an email or sorry, LinkedIn message or anything about that for the presentation or anything else. And then I'm also on the board of the North Texas Hyperion Users Group, North Texas Hug right there, .org. So shameless plug for our little grassroots Dallas, Fort Worth Hyperion organization if anybody's looking to kind of keep this up once this social interaction, networking, knowledge sharing about Hyperion products. You can go out there. We're kind of a bit on hiatus, obviously, with COVID, but once we are beyond that, we'll hopefully get back to more in-person meetings and maybe get to see a lot of you face-to-face. So the quick agenda, I'm going to be going through what I just called the baseline application blueprint. So this is kind of what I would think of as the minimal viable products, if you will, for EPM at your organization, as well as some retail-specific design considerations for each of those products. My last slide is kind of what I call the ideal blueprint editions, or AKA if you're a Kroger and have 27 Oracle Cloud products, which is awesome. Congrats, Kroger. I think Oracle's probably clapping that you guys have all those too. and then Q&A throughout or at the end via the Zoom module. So to quickly start, if our little box here, our dotted box is kind of the EPM world, and I'll kind of step into this as we go through the presentation and fill this up with applications and other arrows and stuff like that. But let's kind of start in the ERP world, so to speak, where you have your AR, AP, sales, etc., subledgers, and then you have your general ledger or general ledgers, more likely. Probably have a few of them at your organization. And then perhaps, just for argument's sake, at least to help with my presentation, let's assume that you're also dumping transaction level data or perhaps balances into a data warehouse, maybe SQL Server or something along those lines. So the first application I'll talk about as far as the first EPM application would be your consolidation system. So this is something that's usually run and or owned by accounting, maybe also tax has some input there. And what that really is going to do is take in your monthly GL actual balances for the close month, and then do the consolidations and other things for them. So you kind of have one way of getting data in from the GLs and the actuals. Then you're going to have your users that would do topside journal entries or any other like cash flow manual adjustments that might happen in this consolidation system. So I kind of put both I guess we'll call the on-premise application as well as the cloud application for all of these up here in the blue. And then these files just kind of go through, these slides just kind of go through a high-level view of what each of these applications do. Obviously, we can and have spent hours individually with presentations or information, white papers, etc., on each of these apps. And I've watched and listened to a lot of the NRL presentations on them all, and they're great. So I'm not going to go too heavy into these, but definitely get with Edward, Robin, your local NRL friend, whoever that might be, in case you want to do a deeper dive into some of these applications. So with the consolidation app, the on-premise application is HFM, Hyperion Financial Management. It's been around for a while. SCCS is the cloud application. It's been around, I think, since about 2016, and it is currently what we're on at ATW. So both of these are basically at parity. So the cloud application has kind of finally caught up with everything that HFM can do plus more, and that's really where the R&D is going from Oracle's perspective. But you can see here, some of the main things that the consolidation system is going to do is integrate with the general ledgers, give you the ability to map the GL data to a corporate chart of accounts or entity hierarchy, automatically translate local currencies into USD and create that CTA plug, eliminate intercompany data, do minority JV interest calculations, allow users to kind of submit topside cash flow adjustments, like I said earlier. And through all that, you get a great validation capabilities and an audit trail to help you throughout that process. So some retail design considerations specifically for the consolidation system. I found that a lot of GLs, you end up with kind of your store expenses, your field expenses, your corporate / SG&A expenses, and that's store payroll, field payroll, corporate payroll. So you end up with kind of traditionally 3 sets of really the same account, but because of the way a lot of traditional general ledgers are set up in a relational database, you kind of have to have those broken out 3 times. Now, when you're in SCCS or perhaps Oracle Cloud Financials for your ERP, and you have dimensionality to work with, essentially you can have one payroll account that intersects with a store location or a field location or a corporate location. So by having 1/3 less of the accounts for those guys in the expense area, that can help you and using that dimensionality that's available within FCCS to kind of create those intersections as opposed to just having an account with some store's name on the end of it. It can really help you have a smaller application that performs better, consolidates quicker, pulls data quicker, etc. One of the other big things that we used FCCS for in the past at GameStop and ATW has also been alternate hierarchies or alternate rollups. You have a few different names. Essentially, these are separate hierarchies or rollups than the main hierarchy to allow you to drill down or drill up or drill down to find out more information specific to what you're looking for. So you might have your main hierarchy be, your balance sheet, income statement accounts. But then I've given a few examples of alternate hierarchies here that you could have, which would be like store controllable versus non-controllable expenses, which would be great to eliminate any kind of, you kind of have that one version of truth, and here's the end all be all of the store controllable accounts and the non-controllable accounts, and shoot those out from the system and keep everybody honest by having that one version of the truth in the system. You could have a product dimension that tracks by product category, perhaps, sales, COGS, units, as well as just that goes along with the total sales and COGS and units accounts. So you can kind of see that maybe that $1 million total sales, and then break it down by product A had 200,000, product B had 300,000, product C had 500,000. And another one that's really, I think, specific to retail is having an alternate kind of internal geographic alternate roll-up that shows really your store alignment. So most times you're going to have your market lead, then your regional lead, then your district lead, then your store lead, then the actual stores. By grouping things in that roll-up, you keep the alignment very straight and very controlled in the system. And that roll-up allows you to report and even perhaps spit out an email reports to those different people at those different levels. Another alternate roll-up could also be, by channel. So traditionally, we've all had physical stores. Historically, should I say, we've all had physical stores, but now in the age of, pop-up or event stores, like a Comic-Con store that your company might have at San Diego Comic-Con, tracking sales or any other information from the company website versus third-party sellers. Now that we have things like pick up from store, ship from store, that by-channel roll-up can really help you really delineate which of those channels is contributing, the most or the least or in the middle to those metrics. And as far as, some stats and ratios that you can have in the system, write them out pretty easily. You could have, store counts by month. So, last month we had 3,000 stores. This month we have, 2,970 because we closed 30. You could use that for kind of a, store average or calculations like that. Comp sales, year over year sales are very easy to get from the system. And then anything like, DIO, DSO, DPO for your inventory information. So kind of stepping into the next spot in there would be your planning, budgeting, forecasting application, which I kind of just abbreviate as PDF. So where we started with the GL and then moved our monthly actuals into the consolidation application, along with some other entries from our valuable employees and resources, we could then take the consolidated actuals and shoot those over to the PPF system, which is typically owned by FP&A. So we're doing month close here, we're doing month close here. Now we've, traditionally, you might send some final data over, you might have some intermittent data that goes in there a few times a day, depending on, how you have it set up or how you want to look at it. And therefore you get nice, clean actuals that will tie back to the consolidation application in your planning application. And then again, like before, you could have people entering planning, budgeting, forecast drivers, or just straight up budget forecast amounts if you're not using drivers, depending on how it's set up. So the on-premise application is aptly named Hyperion Planning. The cloud applications, plural, are really kind of the PBCS or ePBCS, whereas PBCS is kind of a blank slate. Oracle gives you some the tools and the menus to work with, but it's really up to you to build out your chart of accounts, entity roll-ups, different dimensions for location, department, things like that. Whereas ePBCS, Oracle is basically giving you pre-built modules that are using years and years of information and best practices. Kind of gives you a starting point to say, hey, you want to do your budget your revenue and expenses. Here's the financials module that kind of gives you everything you need from dashboards, pre-built accounts. You can load your entities, and then we'll that application will limit your time needing to get off the ground and rolling because a lot of it's already pre-built for you. So in either of those applications, you get the built-in built-in integration to the consolidation engines via data management, which is kind of like your extract, transform, load tool, your ETL tool. You can have centrally controlled forms so that whenever a new account's added, it can automatically get in that form as opposed to everybody having to insert an account in an Excel row. It allows for driver-based, scenario-based, trend-based, predictive planning methods and analysis if you're not just entering straight up dollars into your system. And it even has literally, I think, a click button for enabling rolling forecast if you're a rolling forecast company. All of those first four are really, I think, either of these applications or PBCS and ePBCS would handle that. The bottom four are really specific to ePBCS applications. The modules that you can get are financials, workforce, capital, project, and strategic modeling. We also have, ePBCS, like I said before, has the pre-built dashboards, business rules, forms, and now with the enterprise licensing system, you even get a free-form planning, aka essbase cube, one of those to use in your ePBCS application, and you can further customize ePBCS with the Groovy programming language. Retail design considerations for your planning app, I'd say, utilize as much as the same account and, if we're calling stores location, the location design from the Consolidation app to make really accounting and FP&A's life a lot easier. If you're using, the same structure as much as you can, the same naming conventions, same alternate hierarchies, it makes that cross-department work a lot easier. So when you're trying to tie out budget versus actuals or forecast versus actuals, et cetera, it just kind of makes everybody sing from the same hymnal. Focus on the detailed P&L accounts as much as you can, because really, I think that's where the majority of FP&A does their budget and forecasting on the P&L statement. Not to say that you can't do the balance sheet, but if you do say, I don't want the balance sheet at all, you might want to at least get the roll-ups for the accounts that give you working capital, like total AR, AP, and inventory. So even though you're not trying to get a whole bunch of balance sheet information that you don't need, you at least are able to kind of pull that key metric that CFOs always love to keep track of. For large store footprints, I found it a lot easier and better for us to use the driver-based or at least a rules-based planning for those key accounts at the store level. So if like the one time you do the store level budget, if you do monthly forecasts at the store level, even better. But that kind of saves you from just having to enter hundreds and hundreds of pieces of data for hundreds of accounts for thousands of stores across, infinite amounts of Excel sheets. With driver-based planning, you can kind of input, even by store, just something like your, how many units am I going to sell for this product and what's the price, press go, and then planning will kind of automatically populate that piece for all your stores, hopefully fairly quickly, definitely a lot more quickly than if somebody was trying to enter that manually. And I think it's kind of safer because if you have that many lines and that many stores and that many spreadsheets, somebody's going to make a mistake, fat finger something, a formula error, etc. So by keeping all the rules in the system and letting the system kind of populate that budget, it's much more controlled, and there's really only one place to put that formula. And finally, a lot of retailers are on a 4-5-4, 5-4-5, 5-4-4, or like Elizabeth was saying at Kroger, there's a 53rd week in their close cycle. A lot of those options are out of the box as well too. So if you have one of those, it would probably behoove you to, whenever you're building or creating that app, should I say, go ahead and make sure you check one of those to, again, just make your retail reporting life a little bit easier. The third thing we'll throw in the box here is your BI tool. This is typically used by, maybe your operations department, the COO. And what we're doing here is we're kind of getting away from the monthly, maybe even balance level of information being used for accounting and FP&A work. And now we're getting into, those lots and lots of records that allow us to do, almost by day, by week periods, as opposed to maybe by month up here in the consolidation and the planning tool. We might have a more detailed product dimension because we're starting to look at things by product, maybe even down to the SKU level, depending on how big your organization is. And then where we need to, that's going to calculate and aggregate that information in your BI tool. And then perhaps you can spit out, if you wanted to, by month, key product category actuals to either of these systems, again, with that same data management ETL tool that will kind of sit in the middle here and move this data around. The BI and analytics side, this one's kind of easy. Both the on-premise and cloud applications are essbase, although different version numbers, but they look a good bit different, but act essentially the same, which is nice. So this is probably the most techie slide, so please don't run to the hills if you're a non-techie person. It's against my inner nature to not be super techie, but I was told I had to for this presentation. So essbase is an OLAP application, so online analytical processing database versus a relational database, something like SQL. essbase also happens to be, the behind-the-scenes backbone of SCCS and PBCS and ePBCS as well. So it's nice to see Oracle developing their tools not only for them to be standalone, but also to help run a lot of the other cloud applications. Integrating, like I said before, integrate with ePBCS or PBCS and FCCS, so we can have that nice little triangle of data kind of flowing around. It is accessed through Excel, an Excel add-in, so you're not having to learn a new language or anything to pull from essbase or really either of the other consolidation or planning applications. And it's really great for drill down analysis. Like I said before, if we're at the market and want to see the regions that make up the market, the districts that make up the region, the stores that make up the district, it's a really great tool for doing that kind of drill down analysis. And there used to be two types. So we had a BSO type that was great for entering the data and doing a lot of complex calculations. We had an ASO type that was great for aggregating data so we could report it super quick. And now I think almost by default, everything is coming out of the Oracle Cloud as a hybrid BSO, which really gives you the best of both worlds. So it allows you to both do the quick calculations and do the quick reporting. So that's definitely a great feature of essbase. So retail considerations for BI analytics. Like I said before, if you can, or want, or have that need, you can really do, by day to week to month roll up levels of detail in the period dimension. If you're doing, daily flash reporting like Kroger, and maybe I know GameStop used to do daily reports to a lot of the field leaders in the stores, or if you have like a store goal scenario where you're kind of giving that store either a daily, weekly, monthly goal to hit, and you can kind of compare that quickly to actuals and forecast and budget. That product dimension that I mentioned before was an example of where you can, really have all your products. So you can see by SKU, what are the sales, the COGS, the units, the gross margin. Word of caution here though, if you end up with hundreds of thousands of products or SKUs, and you have really big dimensions elsewhere, maybe lots of, you're down to the day, and you have, 200 accounts or measures that you're tracking, that cube can get really, really big very, very quickly. So just kind of watch out for that cube size as the periods and the years go on, and even the overnight processes can get pretty hammered if your cube is too big. We've had some instances where we had to kind of redesign some cubes after just a couple of years because it got so big so fast that it wasn't even able to kind of refresh itself overnight with new data. Feeding month level and key product category level actuals to the planning application to assist in budget or forecasting. Again, if you're looking for that really, really detailed product information that you don't want to store in Excel, you could have one tab that's pulling, from the BI application, and then another Excel tab that's pulling from your consolidation or planning system to get the latest and greatest numbers. And then since you have that more detailed, you have the opportunity to get a lot more detailed stats. And I'm not going to read all these, but these are some some of the key, or should I say leading, retail stats that I've kind of implemented and wrote in the past for companies. So kind of our last stop, now that we have this beautiful 1, 2, 3 point application blueprint in the middle, how do we get the data out? And that's where our ad hoc reporting and our standard reporting come in to kind of complete that baseline application blueprint picture. So again, on-premise and cloud apps, the two systems are known as, or two reporting options, should I say, are known as our SmartView and financial reporting. So SmartView is really more of an ad hoc Excel-based add-in, so that when you open Excel, you get a nice little SmartView window, and that allows you to just quickly pull data back from the application without learning SQL or anything like that. So you just kind of tell it, I want revenue from America for January FY20. Hit refresh, and boom, it gives you a number right there. And you can drill into that number, drill into the entities, all that kind of fun stuff real quick. It also, it does actually sit in Microsoft Word and PowerPoint as well. So you can kind of create SmartView queries in Excel and then use them in PowerPoint slides for, board decks or Word documents for, internal or external filings or other kind of reports like that. Whereas HFR is kind of its own little module within the systems, and it's really meant for more standardized reporting. So, where you're gonna, this is our balance sheets and how it looks, that's not gonna change, income statement, cash flow, something that's gonna get run every month, maybe get put into a, board book or a CFO report binder kind of thing. Format's never gonna change, the only thing that's gonna change is the number. So for that one, you would just change May to June, run it, and then you're done, and the system kind of spits it out. Like I said, you can create, report books that if you're printing out executive binders or larger report sets. And you can also, which is also great for, retail companies that have lots of physical stores, you can burst them. So you basically write one store P&L, report that looks the same way, we've all agreed upon it, and then refresh that P&L and email it to each of those individual stores or fields or markets as needed. So it's a great way to have a single report that you only have to update once if there's a change, and then spit that out 3,000 times to all your stores. Let's say if you have and then region leaders and district leaders, et cetera. These aren't very retail, super related design concerns because we're in the reporting world, but I think these are more just general guidelines that I like to follow, regardless of what industry you're in, where we have, you can use, SmartView comes with its own set of VBA functions. So if you're into VBA, or maybe somebody at your company's in the VBA, Visual Basic for applications, you can use the Excel VBA and the SmartView VBA to kind of automate smaller reports and help with distribution if you don't want to do it in HFR. For larger, more standard reports, I think that's where you want to use your financial reporting to automatically create and burst those informations. Careful not to turn a SmartView ad hoc report that was supposed to be used once into a everlasting corporate report that people are still trying to pull back 10 years later. If it's something that turns into that and it's a really great report, good job for writing it. But something that might be more suited for FR, where it's not changed or there's not 1,000 copies floating around that people might update or potentially mess up. And then also be wary of really big Excel files using index match, VLOOKUP, SUMIF, some of the more resource intensive functions in Excel, plus your SmartView, because Excel is already going to be doing a lot of calculations on this side while it's also trying to pull information from the cube and SmartView, can lead to kind of the everlasting running query or just general Excel crashes. So just something to keep an eye out on there. Now kind of moving on to the ideal blueprint edition with a whole lot of acronyms, hence the acronym warning. These are kind of I'll call them what I would like to have if I had an unlimited Oracle budget. I think luckily Oracle's made it a lot easier to purchase all of these systems under a single license, and you can kind of turn them on as needed. So historically, these were all kind of sold individually. So you ended up with a lot of different prices and contracts that kind of overlap on each other, and you're renewing this while that one's expired and this one's coming up. So with the new enterprise licensing model, you can get everything in the blue here, minus OAC and narrative reporting, which are still separate licenses. But you can kind of buy, quote unquote, buy all of these and turn them on as you're ready, or as you have the need for one. So on the consolidation side, there's ARCs, account reconciliation cloud service to automate your account reconciliations, really like on the balance sheet, hopefully save a lot of time post-close for your accounting team doing that manually right now. Tax reporting is another one that helps create the tax provisions for the tax department based on highly controlled and secure, non-changing FCCS actuals. On the planning side, there's the modules that I mentioned earlier. So strategic modeling for the LRPs, long range planning, what if analysis, kind of like School of Rock and Kroger were talking about with COVID. I'm sure everybody's talking about with COVID. That budget you created last year is probably needs to be relooked at because it's probably not right anymore. Workforce would be for helping plan your people expenses. So salaries, bonuses, by job type or even by person. And then that kind of feeds up into your high-level salary expense in EPBCS, financials. Capital and projects for PPE type work where you're implementing a new system, building a new building, and you want to kind of track and associate the costs with that. And then EPMCS for basically creating profitability curves, see which products are actually profitable and that you need to focus on. Chances are you'll find out that the product you've been spending a lot of time in pushing is actually not very profitable versus the ones that you might have forgotten about are actually making the company money. So that's what that application is used for. Reporting and other things, EDMCS is really a centralized metadata tool. So if we were going to we acquired a company and we want to name them Entity 100, the idea being you enter that once in EDMCS, and based on how you have it set up, it flows the addition of that into all your other applications, both EPM and perhaps even in your ERP. So enter it once and then it goes to the right place without any, hopefully, spelling mistakes or placement mistakes. OAC is great for data visualizations. Think of this as something along the lines of a Power BI or Tableau, but that actually integrates and connects with a lot of the Oracle applications. And then narrative reporting for integrated collaborative creation of reports, like a 10K, like maybe a CEO report, CFO report, where the whole team's kind of shared. Think of it as maybe a shared HFR, but with lots more bells and whistles. So again, didn't spend a whole lot of time on these because NRL has plenty of good information and slides if you need that type of information. So that's really what I wanted to cover in my 45 minutes, and I wanted to make sure I gave you guys time for questions. And the baseline, like I said, the baseline is this is my own personal opinion. I think you need at least those three. Some may agree or disagree, but anyway, that's my 2 cents on it.
Awesome. Thank you so much, Trey. That was a great hands-on technical overview. Really appreciate it.
Yeah, thanks.
Any questions for Trey? So I've got one that came in. Is how did you deal with change management in making the move to the cloud? I think that's something that a lot of organizations encounter. And so just to know how you kind of adopted change management.
Sure. So I think the first thing that we tried to do, I had the benefit at ATW. We're an actual, the elusive greenfield implementation of Hyperion and both FCCS and EPBCS. So the change management there was a lot of the Excel hell that was before, and we're kind of fast forwarding many light years into the future with these cloud, consolidations and planning apps. So I think not a lot of people hadn't even used Hyperion before. So it was more of a introduction to the tool as a starter. And then people were able to kind of quickly pick up SmartView and HFR on the back end as far as a user perspective. At GameStop, we actually had a planning on-prem system as well as an essbase system for actuals. Essbase system was used for actuals, planning was used for FP&A, and we were able to combine those into a single PBCS cloud application. So that one was a little bit different because at least the users had a lot of SmartView experience for 10, 15 years. This cube had been around, and the planning app had been around for a little over a year, I think. So from there, it was less of a how do I use SmartView, and it went to more of a what's different in the cloud than what we're doing on-prem. And in order to kind of mitigate that, our first version of the application was really a lift and shift. So we kind of kept all the dimensionality the same and just kind of threw it in the cloud to minimize those disruptions from having to learn something new. And I think that helped a lot. And then once everybody got the hang of how it looked and how it felt in the cloud, we then kind of did a V2, build onto that to say, okay, now that you guys get it, we've been needing to move this here, and we're going to add this report here, and we're going to, XYZ, whatever that is. So, I think it's kind of dependent on what you have now and what are you going to that will probably drive change management. And really just having the users involved throughout and having a lot of trainings, having your door/phone open for when people come and inevitably ask questions.
That's great. Yeah, good. Yeah. At Intro, we're starting to put a lot more emphasis around change management and helping our clients kind of transition, to their new platforms. So
Awesome.
Well, any other questions for Trey? It looks like another one just came in. How do you determine to build a new module or a free-form application?
So when we started ePBCS at ATW, the decision was made to start with the financials module. And I think that's a safe place to start for everybody because it's kind of doing what you already were doing, which is creating your, P&L budget or forecast. So that's, I think, the entryway, the first step into the cloud, or just maybe any Hyperion planning application if there's not one currently. So that's the way the users, are used to seeing the chart of accounts roll up into the net income and EBITDA. They have their models that still kind of work maybe the same or close enough to how the system's set up. Then I think once you have financials down and working and flowing well, I think that's when you can start tacking on something else that's a major need. So if you're a services organization, or ATW has a lot of manufacturing as well as retail locations. So we're building the trailers as well as selling the trailers. A lot of people, a lot of different types of people, right? We have a lot of direct costs on the manufacturing side. We have, storefront people, managers, et cetera, in the stores. So, one of the things that we were looking at was potentially going to workforce. Depending on the size of your team and even the implementation team, there's no reason to say you couldn't do financials plus workforce or financials plus capital or project or financials plus strategic modeling. I think it's just kind of understanding where your own company is on a maturity model around the budget and forecast or consolidation process, kind of what can you get away with or what do you think you can get away with? And then on the freeform planning, that's kind of a really cool way to get essbase on the cloud within your own ePBCS system without having to pay, let's say, to go to a true, essbase on the cloud SKU. So the way I would use that and what we've talked about at ATW was kind of creating a sales cube. So, having that product and vendor information in our kind of one corporate ePBCS application probably didn't make a whole lot of sense and would have kind of just gummed up the works a bit. But if we have that freeform planning cube, we can kind of have a standalone mini sales cube that has the product level information, the vendor information, only the dimensions that we want versus the ones that are required by ePBCS or PBCS. And you can kind of have a nice little, one hit cube over here that you can then feed up. Now, if you're someone that has 25, 50, 1,000 essbase cubes, you're going to want to probably stay away from freeform planning unless you can somehow get all those into one. But that's kind of, I think, the two decision paths there.
Great, that's very helpful. Any other questions for Trey? Okay, well, thank you again for participating. I want to invite everybody to stay tuned. We will have DSW talking about their planning cloud migration at the top of the hour. And you won't want to miss Allie's shoe-centric playlist. Thanks, everybody. Thanks, Trey.
All right, thank you all again.